Thank you all for coming. It's great that for the next hour and a half, we can be among the few Americans to realize that there are countries outside of our own. While everyone is focusing on the election, it's great to have a discussion today about Asia and Latin America, because it's certainly not going to be what you're going to be seeing on the news probably for the next 2 or 3 days. We're really excited to have our two very distinguished guests here to have a discussion called Shaping the Future of the Asia-Latin America Relationship. This is the second annual event of this kind that is co-sponsored by the BU Center for the Study of Asia, the Latin American Studies Program, and BU Global Development, so in addition to the Pardee Center, of course. So great to co-sponsor with all three of these groups, and we look forward to a great seminar. What we're going to be doing is first we'll start with a presentation by Mauricio Mesquita Moriera. He is the principal economist and research coordinator of the integration and trade sector of the Inter-American Development Bank. And he'll be presenting a new study that they've completed called Shaping the Future of the Asia and Pacific, Latin America, and the Caribbean Relationship. What's interesting about this study is not only that Mauricio, who's incredible economist who's been working on these issues for a long time, played a big role in this. But this is actually a joint study by the Inter-American Development Bank and the Asian Development Bank on this issue, and it's a very, very interesting. We'll hear a lot about it. Then we're lucky to have in town Enrique Dussel Peters from the National Autonomous University of Mexico. He's in the Department of Economics there, and he directs the Institute for China-Mexico Studies. He also has some new reports, one brand new called 40 Years of the Mexico-China Relationship, and another one, the impact, China's impacts in Latin America, the trade and investment dimensions. Both of these are in Spanish. So we'll hear from Dr. Mesquita Moriera on his ADB study, and then Professor Dussel Peters will provide some commentary, and then we can have a discussion. So take it away, Mauricio.
Thank you very much, Kevin. Thank you, first of all, for the invitation. It's a pleasure to be here. So the idea is to try to give you, highlights or the main messages of this report, this joint report. Thank you. That we prepare with the ADB, and I'll start telling you a little bit of the story behind it, a little bit of background for you guys to understand, why it was put together in this way. So this came up as something that the presidents of the two institutions decided to, they got together. The president of IDB is very enthusiastic about this relationship with Asia, and the same thing happens with the ADB president, the Japanese citizen, and they got together and decided that they want to study on Asia and Latin America, looking at trade and investments. And then, after that, they call us, the staff from both banks, and told us that we needed to come up with a product along those lines. And there was two big challenges in putting this thing together. The first challenge is that there's already a lot of stuff about this relationship. In the bank, we have already published a number of studies on China, particularly on China. There's so much stuff written about China. Kevin is one of the main contributors in this literature. So there's a lot of stuff already. We know more or less what are the issues. Not so much about the rest of Asia. But it still, it was a challenge to come up with something new. We knew what to do, but the challenge was to do something different, and more than that, to come up with some, concrete policy recommendations. I think one of the usual problems with the studies that you write, 40 pages, 200 pages, and and usually you have, a paragraph about policy recommendations, which are, in some cases totally commonplace, things that people already knew. So the challenge, one of the big challenges was to face this thing and try to come up with something new, and the other is to work together with the ADB, to have these two institutions working together, which have very different cultures and very different type of governance. The IDB, I think it's much more, let's say, liberal in the sense they give us much more room in terms of doing research and the things that we talk about, the recommendations we give, always with a disclaimer. And the Asian Development Bank is much more careful about what their researchers can say, and that's one thing. The other thing is that there are different visions about this relationship, how this thing should work, and so it was quite a challenge to put this thing together. So with that, I'm gonna start by giving just I'm sorry about the people that are gonna be watching the video. I'm gonna use some of the slides because there's a lot of data that I think it's important to understand why the policy recommendations that we come up with are relevant. So just give you so that's the outline of the book, of the report. In the end, we come up with the solution of the two institutions writing two different chapters. There was sort of this division of labor that made the work easier. So we end up writing the chapter on trade and the chapter on cooperation. It was the first and the last chapter. And the ADB work on this second chapter, which is mainly evaluating the type of trade agreements that the two regions have. What are the pros and cons, the type of characteristics that those agreements have, and the chapter on investment, on FDI. So what I'm going to do is I'm going to concentrate more on the chapters that we work with for obvious reasons, but I'm going to give you a highlight of type of things that they work on the other two chapters. So I'm going to start with the trade, the trade part of the thing. Here's the story. That's I think the most well-known story, which China clearly is the main actor. It's a story that started early in the 2000s, and suddenly this relationship boom, took off between the two regions, mainly driven by China, and has reached, particularly in terms of the importance that Asia has to Latin America, has reached a historical record. If you have if you look at the very long time series of trade between the two regions, it's if you look at the figure for 2011, 22.6%. That's the share of Asia in Latin America trade, imports plus exports. That's totally unprecedented. If the series goes to the early 20th century, so most of this jump started in the early 2000s. You see some of an increase in terms of the importance Latin America has in Asian trade, but there's clearly a huge asymmetry. You're talking about 22% share of Asia's share of Latin American trade, and in the case of LAC share of Asia trade is 4.6%. But again, it has increased significantly since the early 2000s. It's not unprecedented if you look at the whole time series, but you also see an increase there, and there's. The reason there was this big jump is mainly because of the complementarity between these two economies, between these two regions, and as I said before, particularly because of the emergence of China. There's no other explanation for that. China started to grow, at 2 digits, 10, 12, 13% a year. Doesn't have enough natural resources. Those resources had to come from somewhere, and clearly Latin America is one of the best endowed regions in the world for this type of resources. And what is amazing is that it only started in the early 2000s, China has been growing, since the, late 1980s. So why only in the 2000s? And one of the hypotheses here is that they reached their limit in terms of they reached their constraint in terms of natural resources. So the thing started to boom. On the export side of LAC, in terms of exports of LAC to China, but you also see a boom in terms of China exports to Latin America. So there's nothing new about that. We just updated the figures. And the main challenge here, what we want to do is this something, this trend is something that you can, if you think in terms of 10, 20 years ahead, is this something that's going to, look like that, or is just, a short-term cycle? Because if you were trying to think in terms of the relationship in the long term, if you think that this cycle, this boom, is just a short-term typical commodity cycle that's going to be reversed pretty soon, then of course your priorities, your policy priorities for the relationship are going to be totally different. And our idea here is to try to say something about how sustainable this type of partner is in 10, 20 years. And then try to come up with some recommendations on top of that. So I'm going to just go quickly to those slides. So there's this boom. This boom has been started in the early 2000s and has some typical characteristics. It's very concentrated in terms of in geographical terms. You're talking about, in Latin America, you're talking about the southern cone, Brazil, Peru, Chile, and Argentina, the main traders and exporters to Asia, particularly to China. And you have Mexico, but mostly in the import side. Mexico is the second importer from Asia after Brazil, but it doesn't export. I mean, the amount of Mexican exports to Asia, and particularly to China, are minimal and relatively very small. And on the Asian side is mainly China, Korea, Japan, which are the main actors. So there's a very high concentration in terms of the geography, which suggests that there's a lot of room in terms of trying to diversify this relationship, to try to include, for instance, South Asia, to try to include India. In the case of Latin America, we have a lot of countries which haven't benefited at all from this trade, particularly Central America, some countries in the Asian, in the Andean region as well. And it's concentrated geographically. It's also concentrated a lot in terms of the goods that are being traded, particularly in terms of the LAC exports to Asia. And this happens not only in the Chinese case, which is most is better known, but also in the other Asian countries. And if you look at India, if you look at Japan or Korea, we are talking about 4 or 5 big commodities, which usually account for 70-80% of total exports to those countries. And in some cases, you see a lot of imbalances in these relationships, particularly in Mexico, in Central America. What you see in Mexico, Central America, we had this chart where we tried to look at the trade balance as a share of total trade. And in the case of Mexico, Central America, it's almost 80% of this trade. It's imports from Mexican or Central American imports from Asia. So 80% of the trade is explained just by one flow, it's by one direction, just by exports, the Asian exports to Mexico, Central America. There's not much flow on the other way around. And you look at South America, you see a more balanced relationship, and there's no mystery there. That's because the complementarity in terms of natural resources much bigger for South American countries than it is for Central America and for Mexico. So those type of characteristics, concentrated in terms of geographical terms and in terms of goods, usually leads to a lot of uneasy among Latin American governments. They always, and we are doing that in previous report as well, drawing attention to this fact that look, it's not that this could be this is not necessarily an economic issue, but if you have trading balances of this size, $50 billion trading balance, for instance, in Mexico with China, you might end up having political economy issues with this relationship. You're bound to have a backlash sooner or later if you don't try to balance this relationship either with more exports or from more FDI, more Asian FDI or Chinese FDI in the region. So that's clearly something that was in the agenda. And also there was the economic issue that the region wants to have a more diversified export composition to Asia. You just don't want to export the basic products, basic soy, iron ore, pulp paper. They wanted to add more value to that. That's the storyline. And if you look at Latin American history, that's something that we always try to move away from. And then when you look at the relationship with Asia, that's exactly where we are right now. I mean, we're exporting the basic stuff to them. So we would like to move and try to diversify those exports. So let me just move to this side of the. So that there's nothing new about this. Those concerns that was already discussed in a number of the studies. So what we wanted to go beyond that type of problem. We acknowledge that that's an issue. It has to be in any conversation, negotiation between any Latin American country and an Asian country. But we also wanted to go beyond that and try to answer that question that I referred in the beginning. So is this a relationship that's going to change if governments really address those issues? Or this is something that's going to keep, the basic pattern, the basic core is going to remain like that for the medium to long term? Then the idea is to try to answer these questions, and the answer that we came up with is that, if it's true there's room to diversify those exports and to try to add more value to that, it's also unrealistic to think that in 10, 20 years, Latin America is going to be exporting, a lot of manufacturing goods to Asia. We don't think that's going to happen. And the reason is you just have to look at the endowments. I mean, there's no way, Latin American manufacturers are going to be competitive in China because of labor costs and because of all the natural resources they have. And I'm not talking just about China. There's India, clearly another big player which is coming along. It's going to be a major exporter of manufacturing goods. So on the one hand, we're going to have this pressure on commodity price. They're going to be appreciating the exchange rate all over, particularly all over South America. And on the other, you're going to have this huge competitive pressure from Asian economies. It's true that the Chinese wages are rising fast, but remember they still have 40% of the people in agriculture. They're going to be migrating eventually to manufacturing services. India has 60% of its population still in agriculture with very, very low productivity, which is, there's nowhere to go. It's not going to be to IT. Eventually it's going to be to manufacturing as well. So it's hard to think a scenario where this relationship is going to shift completely. You're going to have this huge amount of exports, of manufacturing exports to Asia. So if you believe this scenario, and then we try to come up with a number of figures and data to support that, then you have to think of a different policy agenda for this relationship. So let me just go quickly through those evidence that we use to support this idea that we are in that thing for the long haul. We're going to be exporting commodities for Asia for a long time. And this is not a short-term cycle. That doesn't mean that there's no more cycles. We are actually living through this downturn. It's sort of a downturn in terms of the commodity price these days. But if you look at the fundamentals of these two regions, particularly if you look at the scarcity of resources that Asia has, and particularly its two biggest economies, in terms of population, if you look at China and India, they don't have enough land, they don't have enough water to sustain the rates of growth they have been achieving. So they're gonna keep on demanding a lot of raw material, and that's gonna have to come from either Africa or Latin America. So that's not something that's gonna go away. Of course, there are factors that you have to take into account, which is partly the discussion for those of you that know the Latin America history and all the debate, the policy debate around that, the 50s and the 60s, Raul Prebisch and so on and so forth. There's exactly this kind of debate that eventually, there are factors that are going to reduce the demand for raw material. Usually countries go to this cycle, as usually it's inverted U shape, in terms of the relationship of demand per capita for natural resources. And the per capita income has this U shape, inverted U shape. It tends to increase faster than per capita income at the low stages of per capita income, and then it started to invert. It started to decline, and the factors that are behind this inflection point is the fact that as incomes grow, you tend to demand less of those raw materials. You tend to move towards services, as any other, as any developed economy shows. The size of the services sectors increase in the GDP. So when the GDP grows, since services doesn't demand as much as raw material as manufacturing, for instance, your demand for those type of goods tend to reduce. The other thing is technological change. If you introduce, if the price of the raw materials increase too much, you have the incentive for firms to replace those raw materials for other, artificial, other type of things, which is something that happened in the past with the transition, particularly with the transition from the UK to the US in terms of leadership of the world economy. And it's bound to happen in China, it's bound to happen in India as well. The thing here is, we're not denying that this is going to happen. The thing is, how long this is going to take for them to, reach this inflection point, and even when they do that, we're going to be talking about huge economies. Now, even if the demand doesn't keep growing as fast as it used to be, you're still going to have a huge market. So what we did was sort of a crazy economist attempt to do we can spend the afternoon here discussing the econometric issues behind this thing. But we actually tried to estimate this inverted U curve for a number of commodities, for the main Latin American commodities. And we did that for copper, and we did that for soy. And we did find the inverted U shape, countries with higher per capita income has a lower consumption per capita of those raw materials. But look at in the case of China, the thing is to look at the position of China and India, for instance, to the inflection point. In both cases, you can see very clearly in the graph that they are, very far away from this inflection point. And if you do the math, in the case of China, and in the case of copper, for instance, it will take 35 years for China to reach this inflection point, where they're going to start, the demand per capita is going to start to decline. And in the case of India, it's half a century. So we're not talking about 5 years, 3 years. We're going to talk about a long and dynamic demand for those raw materials, which suggests that the pressure, the core of this relationship is going to remain around those those goods. And the other important thing to note, which is not to make us all Latin Americans depressed, is that we all have this idea that, well, if you're going to specialize in those goods, they all have this declining in terms of trade. That is something that motivated industrialization in the region. There's still people discuss if there's really this declining trends in terms of the price of commodities relative to manufacturing. But that, in policy terms, it doesn't matter. What prevails in the 60s and the 50s and the 60s was this idea that this was true, and then this pushed governments to promote industrialization. But if you look at the data these days, it doesn't look like that we are in this kind of world anymore. And in fact, I would risk saying that there was sort of a reverse role in terms of commodities versus manufacturing. I would risk saying that today there are much more competition in manufacturing. The market got so crowded that if you look at the behavior of the prices of those type of goods and compare that to any raw material, to mining or to food products, you're going to see the reverse. And that's exactly what this graph shows. I used the data from the US market, which is clearly the most open and competitive market in the world. And if you look at the time series from the 80s until 2011, what you're going to see, if you deflate, you get the manufacturing prices. In this case, I look at capital goods, consumer goods, and what was that? Yeah, that was the main. There's two categories of manufacturing goods: capital goods and consumer goods, using the index, the price indices of the Labor Bureau of Statistics, and compare that, deflated by the average inflation, compare that to the prices of raw materials and food. And what you see is that the prices of manufacturing goods in general look like a electrocardiogram of a dead person. It's just and you're not adjusting for quality there. Goods are improving their quality, computers, iPads, whatever, but the prices are either stable in the case of consumer goods in general. In the case of capital goods, there is a big fall, a real fall along the periods. Whereas you look at food and raw materials, it's the other. It's just going through the roof. So it's not that there's no any risk in terms of becoming more specialized in raw material but when you think in terms of the relationship of Asia, I think there's no other way around this thing. And the good news is that you might be having decline in terms of trade. On the contrary, you're gonna be seeing the price of your exports increasing for the medium and long term. So if you accept this scenario, if you believe this scenario, so what governments should do? And there's a lot of discussion with my counterparts in the Asian Development Bank, because it's not only the Latin American that resist this scenario. They also don't like this scenario. And they say, no, Latin America has to industrialize. You need to do industrial policy. You're gonna be like Asia. I don't think this is something reasonable. We tried that thing before. Of course, Mexico is a totally different case in this scenario. I'm mostly concentrated in South America, but even in the case of Mexico, I don't see the relationship between Mexico and Asia in general as having Mexico as a major exporter of manufacturing goods. I see more of this happening as Mexico investing in Asia, trying to take advantage of this growing market. But if you accept those scenarios, this scenario that the core of the relationship is going to be this commodity for manufacturing thing, what governments can do, and then the usual suspects in these relationships are what we call, our economists call the trade costs. So you have to look at tariffs. You have to look at the costs of transportation between the two regions. And what we see is that there's a lot of work to be done there. If you look at the average tariff, the average Asian tariff on Latin American exports, they are clearly high, in particularly high in the case of agricultural goods. And this is particularly problematic in the South Asia. We're talking about India, Pakistan, where you're talking about tariffs of 60, 70%. And not only that, is the fact that there's this escalation in the tariffs. The more you added value to those resources, the higher tariffs you pay. So the way that the structure of protection is designed, it pushes us to be specialized in the basic stages of the value chain. So if you're going to be specialized in commodities, we could still add value to those commodities. But for that to happen, you need to reduce those barriers. So this clearly should be, I would put that in the top of the list of the priorities that those governments can discuss with Asian economies. And if you look at the Latin American side, as one would expect, the higher tariffs are on manufacturing, but they are not as high as the tariffs that the Asians impose on agriculture and mining products. Kevin already told me I have 5 minutes, so let me go quickly through this thing. So I mentioned tariffs. The other thing is the transport costs. This is something that usually we don't talk too much about it. I mean, trade economists usually forget about. They usually assume that transport costs are zero and then look at tariffs. But when you look at the real world, it's not. I mean, you can bring tariffs to zero, but if you have a very poor infrastructure, your transport costs are very high. This can work as a very high tariff, and this can really, put a huge obstacle to trade. And what we see in the trade with Asia is that not only tariffs are high, but transport costs as high. If you compare, if you divide transport costs by the value of exports, is as high as tariffs in general. So there's an agenda of traditional trade policy there, but there's an agenda also in terms of trying to improve ports, increase competition in maritime and air shipping, which is clearly something that can generate a lot of gains in terms of promoting trade. The other thing is, and this is something that the ADB look at in the second chapter, is that the good news about those tariffs, not so much about the transport cost, but about the tariffs, that there's a rising trend in terms of trade agreements between the regions. The number of trade agreements, it's already 18. You have 18 agreements between the two regions. And if all the agreements go through, there's a lot of the number of agreements under negotiations. If they go through, you're going to have 30 agreements by 2020. So it's a substantial number. This, of course, is going to help to reduce trade costs. But the problem is that most of those agreements, there's a lot of heterogeneity in terms of the quality of those agreements. The good agreements, quote unquote, are the ones between, in terms of being more comprehensive, is the ones between Peru and Chile. Peru, China, Peru, South Korea, Chile, South Korea, Chile, China. those agreements really, try to liberalize most of the goods. They leave trade practically open. But most of the other agreements, they are very limited. They only cover, a very limited number of goods. For instance, Mercosur with India, it's just 400 items with a schedule that goes forever. So it's not gonna, and of course, it's kind of unrealistic to think that you're gonna have a trade agreement between Brazil and China, for instance, because of course, there's a lot of conflict in terms of, manufacturing. So you shouldn't put all your eggs in this FTA basket. You should try to, negotiate, for instance, sector by sector. Don't wait to have this very big, agreements, even though politicians are more keen to look at those things. Well, in terms of investment, what we did, and I think Kevin knows that well, the data on that is very, very sketchy. You have those announced investments, surveys that look at announced investments, and they have the data from the central banks. And they world apart. Announced investments from Asia, if you look at, they have some of the figures here, you're going to go to 170 billion from 2003 to 2011. But if you look at data of the central bank, it's 1/3 of that. So, and there's a lot of reasons for that. I don't have the time to go into details, but what you see is there's a clear an asymmetry between Asian investment in LAC, which has been rising, has more of a critical mass, and LAC investment in Asia, which is still a trickle. I mean, it's just it's very concentrated on Brazil, Mexico, but you don't see much. A little bit of Chile. And in the case of Asia, Japan is still the main investor in the region. It's almost 40% of the Asian investment in Latin America, and China is catching up, but still behind South Korea, for instance, according to some of the figures. That was the thing. So I'll conclude just with a few words about cooperation. I mean, our presidents insisted on having this chapter on cooperation. It's something that's not easy for economists to write. Which is basically no market cooperation. So it's sort of this bias of economists. We try to measure, how can you measure cooperation? So we look at the number of agreements, and in fact, there's a boom in terms of cooperation agreements between Asia and Latin America. It kind of, at least I like to think that it has followed trade. Somehow, after trade has boomed, there's this very high activity, diplomatic activity in terms of signing agreements. But most of those agreements, and you have a list of them in the book, are MOUs, which is, it's very cheap to sign because you don't commit to anything, you don't have resources, and don't have how to assess the results. So it's good there's a lot of activity, but most of what is happening is I would say, it's kind of, more of a political show than actual cooperation going on. So what we suggest, and there are some exceptions, there's a multitude of forums as well, APEC, there's this FIALAC, there's the Trans-Pacific Partnership is going on, there's this thing between South America, between Brazil, South Africa, and India, which I think is one of the best organized attempts on this direction. But the truth is, if you look at the whole, there's too much hype and not much substance in terms of what's going on. And worse, I mean, there's no data to assess what was the impact of this cooperation between China and Peru in terms of concrete improvements in whatever they are cooperating with. So we have this thing of trying to encourage officials to, when they sign those things, they somehow create some metric to assess what are the best institutional arrangement that would generate the best results. So just to conclude, and sorry if I go over my time, that's a little bit the story we try to tell. It's if you look at the relationship in 10, 20 years, it's probably going to look the same in terms of the composition of trade. Same in the sense that it's going to be basically manufacturing for commodities, but there's a lot of room there in terms of adding value to those commodities. But for that to happen, you need to bring down those barriers, both in terms of the traditional trade barriers, but also in terms of the transport costs that involve in those kind of trade. Investment can play a big role in that, particularly in the sense that I mentioned before, because it can reduce the tensions, particularly in the relationships like Mexico, for instance, where there's a huge trade deficit. If you have investment there, you can bring those tensions down. So there's a lot of work to try to encourage more FDI. And the same thing, Latin America has to invest more in Asia to know better the clients and to try to penetrate more on those markets. And cooperation, I think the challenge is to make those agreements more meaningful and more measurable. I'll leave it there. Thank you.
Thank you very much. And now we'll have Professor Enrique Dussel give about 10 minutes of comments on the report, and then we'll open it up for questions, but I'll be sure to at the very end, to let Mauricio give some final remarks so you can respond to Enrique as well. Please.
Okay. Well, thank you very much for the invitation, and I'm happy to share some ideas and reflections with Kevin and with Mauricio, who we know each other for a long time. Look, 600 seconds, and it's a long report, so I will just pick up a few issues that I believe are, from my perspective, interesting, and a few questions to Mauricio, and also probably to Kevin and to the audience. First of all, I would say the document is interesting because it puts the topic on the table. It's an interesting basic document to discuss the relationship between Asia Pacific and Latin America. There are not too many documents on this. If there is little on Asia and Latin America and China and Latin America and Japan and Latin America, there is even less of this broad region with Latin America. So I think this basic discussion and putting this on the table is interesting, relevant. Second topic, as Mauricio was mentioning, there is very clearly a wave of very importantly increasing trade, probably a first period. Expectations are that hopefully in the future the relationship between these two regions will get more complex. Expectations are that investments might increase. The topic, and the Mauricio himself personally, but also the Inter-American Development Bank has been working in Latin America on the issue of transportation costs for a long time, and I think it's a relevant topic. Again, trade economists and development economists were very good at saying somehow magically goods and also services get from point A to point B. Nobody speaks of roads, and nobody speaks of buses, transportation, of whatever costs that in many cases, by the way, can be much higher and much more relevant, I would say, even than tariffs. And some empirical work we did from regarding transportation costs from Mexico to the United States. Surprisingly, again, transportation costs are much higher than tariffs. And this is not absolutely irrelevant, I would say. So topics regarding transportation costs, infrastructure are very relevant if we want to speak and discuss of future stages in the relationship between these two regions. I think it was very interesting to include a topic also on non-market cooperation on the rise. There is a lot of things going on, from Confucius institutes to cultural cooperation, etc., which from my perspective, again, I'm coordinating the Center for Chinese-Mexican Studies in Mexico, but we work with many institutions in Latin America, I would say are critical. Because, of course, behind trade, behind the political will to negotiate and to put down trade barriers, to reduce transportation costs, to build ports, airports, etc., there has to be a political and social interest and will. No? And so if you want to understand what is going on in this huge region of Asia Pacific, the population socially, politically, culturally has to understand the other region. No? Otherwise, this will not happen. No? I mean, in many cases in Asia, in Latin America, we have racism, no? To be very clear. No? Racism against Asia, against Chinese, against Japanese, and also in Asia against Mexico. So all these cultural topics, all these R&D issues, all these parades in Mexico we had for several years on Reforma, huge parades where hundreds of thousands of people learned a little bit of the Chinese community in Mexico City, I would say are critical. No? Otherwise, all the proposals that Mauricio mentioned will not happen automatically. No? Regarding, again, this chapter on non-market cooperation on the rise. No? 5 questions that I would like to pose then, acknowledging again an interesting basis for discussing a broad topic. No? One is, and again, as part of the discussion, no? Of course there is the discussion, the possibility of deepening trade, thinking of new stages in the next decades, etc. One option apparently is going to be to increase bilateral and regional free trade agreements between Asia Pacific and Latin America, the famous spaghetti bowl where the spaghetti bowl grows and gets very vivid. No? Very interesting, and of course this is being discussed in these days. You mentioned it very briefly, and I know it is politically not easy, but of course there is a very interesting, and this is being discussed these days, the issue of the TPP, no? The Trans-Pacific Partnership, no? Which might be an interesting proposal for some countries in terms of discussing again this Asia-Pacific Latin American relationship, but without China. No? China says this is a US proposal and we are not interested in this. And if behind all these trade statistics, investments, costs, whatever, if we take Asia without China, the picture gets very different. No? So I would simply like to hear your comment. I know that, I mean, probably it's no coincidence that the TPP is not in the document. But briefly and politely, I would say, no? Because probably within Asia, you have very different opinions on the topic. No? And I would say, so you have probably a group of options. The TPP is one option that is today on the table. No? And I would say also, regarding this first question, what my impression, but again, maybe your impression and your impression, Kevin, also is, my impression is that increasingly in Latin American business communities are increasingly getting fed up with free trade agreements. No? If I work a lot with business communities and business organizations and chambers in Mexico, again, it might be different in other parts, but Korea, for example, has been looking for a free trade agreement with Mexico in the last 10 years without success. China is pushing without any success of even starting to discuss the topic of a free trade agreement with Mexico, and I think the same with Brazil and others. No?
Yeah.
So I think in the business community, I would say maybe it's not generalized, but in the business community in Latin America, there is increasingly the opinion, look, enough sufficient free trade agreements, let's try to take some juice, let's try to use these free trade agreements that we have already signed in the last 10, 20 years, and today signing something such big as, for example, with Asia and Asia Pacific is today not a relevant question. Not only not relevant, but we do not want to do this. No, so the business community, at least in Mexico, has been very clear, saying no to Korea, no to Japan, etc., etc. One topic of discussions. No, the second topic. Would be, or my question and reflection is the idea that trade in a first stage, trade has been booming, as we saw, and somehow we expect that foreign direct investment will do so in a future stage. No? My question would be, what kind of institutions do you see that are evolving, are being suggested for doing so? As we well know, this will not happen automatically. No, we might be here in 30 years, and then we'll end up with, again, increasing trade, but investment is very slow, and if at all, it comes from Asia to Latin America, and very little from Latin America to China. Are there any specific institutions with concrete projects that will probably result from such a document, from such a discussion, concretely regarding Asia Pacific and Latin America? Otherwise, I believe, yes, some firms will invest for sure, but this will not happen automatically. Okay? The third question is the following, and to be very honest, and we know each other for a long time, I would say, is it worth doing such a complex topic of Asia Pacific? I just counted the number, so Asia Pacific has 17 countries, no? And Latin America has 37 countries, no? So if you do this matrix of 17 by 37 and include 10, 15 topics from tariffs to trade to investments to non-market items, etc., you end up with a huge matrix of thousands of topics, no? Where you can always say, well, but Jamaica is different than Argentina, and of course India is not equal to China, but include, if we see Vietnam. At the end, it is very difficult, and I'm sure this was one of also of the topics when you want to make proposals. It is very difficult to make some kind of concrete proposals independently of the idea and I would say of the attractiveness of the topic, that something is going on. No? Your opinions here. Fourth, and I'm just finishing, what I would say are the concrete options then for a deeper integration between these huge, highly heterogeneous regions of Asia Pacific and Latin America. No? The issue of deep integration is being discussed with some detail, and what would this mean in terms again of institutions, of concrete mechanisms, instruments? No? Is there something beyond the transportation costs, infrastructure, or is this the main proposal? And the fifth thing, with this I finish, is I would say, and from a broader perspective, what are the lessons from a Latin American perspective in terms of development for the region? No? I agree probably with you that yes, Latin America, with differences, has clearly, or will have in the future, will continue to have this specialization path towards raw materials, no? From energy to agriculture, mining, etc. No? The big question is, of course, and if you include an analysis, as you mentioned, of global commodity chains and segments, in which sectors are, to put it more, how you say, extreme, I would say a sectorial analysis is irrelevant. This is, when you see segments of global commodity chains, you see that soya beans has dozens of different segments, and so you can specialize in soya beans. The question is in what? No? Are you going to do segments of higher value-added chains of R&D, etc., or not? What is happening in most of Latin America, there is somehow the belief that automatically, A, which is not your opinion, but A, we will continue to deepen our specialization in these raw materials, and B, somehow necessarily, apparently, in raw materials with low value added and with low technology value, which means low wages, and I would say in general, underdevelopment without complaints. No? Highly concentrated in a few firms who have done their work on soya beans in Argentina, of minerals in Brazil. You end up with few firms, few owners, in many cases owners that are not even Latin America, etc. No? So you end up with a very grim scenario. No? You end up with a highly polarized economy, with huge environmental costs, and destined to be underdeveloped under the new rise of Asia, China, and now the Asia Pacific. No? So what are the options, policy options, development options, etc., for Latin America? Thank you.
Thanks, Enrique, and I promise that I'll let Mauricio get the last word, but I want to bring the crowd into it before you start looking at your iPhones and checking election returns.
So if you have results, let us know.
Yeah, if anyone wants to give us a quick note. So Cynthia over here has a microphone that is both for us, not necessarily for us to be able to hear you, but also for the video that they're making. Please quickly tell us your name, keep your question really short. I'm going to take 2 or 3 questions at a time and let these folks respond to them. We'll do a couple waves, and I'm going to stop at 1:20 so that Mauricio has 10 minutes to sort of wrap up.
Hi, my name's Julian. I know early on in the presentation you were talking about how China was importing a lot of raw materials, but I was wondering why the figures were much lower for Japan, because I know Japan also is in a lot of, like, they have a high demand for raw materials. So yeah, why is there such a discrepancy?
Mm-hmm. Okay, let me take a cluster.
Hi, I'm Amos Irwin. Thanks a lot. My question is, you talked about how the demand for raw materials has this upside down U shape, and how China is definitely on sort of the left side of that. Mm-hmm. But with China's most recent plans, the 12th five-year plan, they do seem to be trying to decrease the sort of heavy manufacturing and focus on consumer-driven economy and more advanced manufacturing. And I'm wondering, just to what extent do you think that this will have any impact?
Mm-hmm. And one more here.
Good morning. My name is Juan. When I was hearing you talk about all this, it seems like I'm from Colombia, and my opinion is that we were providers for the now developed countries for raw materials, as they were in that process. And it seems now that we're shifting to becoming providers for raw materials for Asia's rise. So my question would be, are we like destined to just be raw material providers and just stay in that, not shift towards manufacturing goods and just like, it seems like a curse to me. So that would be my question.
Yeah. Good question.
Mm.
Yeah. Okay. Thank you for all the questions. Thank you, Enrique, for the comments. Let me try to cover all of them. The TPP. No, I mean, we do cover the TPP, but it's mainly a description what the TPP is and stuff like that. Yeah, the Chinese are not included. It's a sensitive topic, definitely. But I mean, I do see as, you know, for a number of countries as a good instrument to try to, you know, penetrate the Asian markets, particularly Mexico, for instance. I think, you know, it was a good way of trying to go beyond China and, you know, look at Korea and Southeast Asia. You know, I don't see too much risk for Mexico there, and the situation would be completely different if the Chinese were there. No? Then, you know, it would be a totally different story. But and the other thing about the TPP is that they are trying to go beyond the usual rules about trade. They try to discipline, for instance, the role of state companies, you know, and government support, and, you know, things related to industrial policy, which I think it's you know, this is a you know, a huge discussion in itself, but I see that as something in these days. I think for the region, for Latin America as a whole, particularly for Latin American manufacturers, if this kind of discipline were really imposed on the Chinese, for instance, I think we would have a lot to benefit from that. You know, if you give them, continue to give them the policy space they have to use the state companies, all the subsidies and all the state to push, you know, industrial manufacturing targets, I think we have a lot to lose. So I see some good things, some good opportunities in the TPP, and I think some of the countries in the region could, you know, benefit from that. You mentioned the FTA fatigue, I would say. Yeah.
Let me just tell people that we're throwing around a lot of alphabet soup here, and so
sorry.
when these guys are talking about the TPP, they're talking about the Trans-Pacific Partnership Agreement. Does anyone raise your hand if you've heard of it? All right, so it's a trade treaty that has basically been sparked by the Obama administration. It was started under the Bush administration. That would be trade between the United States, Chile, Peru, Australia, New Zealand, Brunei, Singapore, Vietnam, and what's interesting in the past few months is in Mexico and Canada, and so it would be, and potentially Japan, and so it would be the largest trade treaty that's out there, if anyone thought it could ever get passed.
And China has said, not with me, no?
Yeah. Sorry, I didn't mean to cut in, but just to make sure that everybody knew what we were, so that
yeah,
we weren't just talking to each other.
The U.S. wants China to be in anyway, but you know, but moving to the FTA, free trade agreements fatigue. Yeah, no, I think you're talking mainly about Mexico. I think there's clearly a situation in Brazil. It's always been the case. I mean, Brazil only has one. I mean, worth of the name is just Mercosur, and you probably know how difficult things are in Mercosur these days. So yeah, I mean, it doesn't have to be, you know, you can bring trade barriers by other means. It doesn't have to be those huge agreements. But in the case of Mexico, I really don't understand why they are so resistant to these things. If they already have agreements with the U.S., with, you know, European Union,
Japan.
even they're resistant to have an agreement, and the Brazilians too. But that's the big hole in the, you know, why Mexico and Brazil can have a trade agreement? Come on, you can have a trade agreement with the U.S., but you can have a trade agreement with Brazil. It's really hard to understand that. So, but you know, I think it's you know, it's not the only instrument out there. There are a number of other options that one could explore to try to bring those policy down, those barriers down. policy recommendations, we could spend the week here discussing development policy strategies and so on and so forth. There is something that was on the table at the beginning of the report, particularly on the ADB side. They want to tell us what to do to become like them. Like we haven't tried that before. I mean, we went through all those industrial policies in the 50s and the 60s, all the protections and so on and so forth. So you can't just, pretend that didn't happen and start the discussion as if we were just, most of the countries in the region are already industrialized. So this is not an issue. And the thing of Asia, particularly of China, which people usually lose sight of, and I see a lot of excitement in countries like Brazil. When I look at the Chinese are intervening, the state is doing this and doing that, it's targeting this and targeting that. But they lose sight of the institutional environment. I mean, in China, you have one party. You have, you don't have exactly, an environment where you can have difference of opinion, and so it's very hard. It's much easier to implement, sort of a target policy, to pick winners, to pick sectors and things like that. Brazil is a very nice counterexample. Brazil has recently tried to revive those industrial policy things, and the last measures they took, they picked 3 sectors. Now, these are going to be the sectors because they are, technological intensive, this and that. In 3 weeks, there were already 20 sectors. You can't do that in a democracy. I mean, why, people are going to ask, why just these 2-3 guys are going to get all the subsidies? So that's, a critical issue whenever you think of, try to replicate Asian policy. It has been like that. It was like that in Korea. It was like that in Taiwan. It was like, I think the Chinese took this thing to the other level, but I don't think this is viable in most of Latin American countries, and I don't think we want this kind of institutional environment anyway. The question about Japan, it's true. I mean, if you look at the series, what has been sustained the relationship until the 2000 was the relationship with Japan. Japan was a major importer of raw material, iron ore from most of South America. But you have to look at the difference in size. No? You have 120 million people in Japan. You have 1.3 billion in China. So the level of scarcity you see in China has no precedent in the world history, neither the one you see in India. So you're not, and more than that, in Japan has already reached a certain type of per capita income. So he's Japan is on the declining side of the inverted U shape. So it's a very high per capita income. Very smaller, much smaller population. So no wonder the Chinese took over, and we're gonna be dominating alongside of India. India, I think, has so many restrictions, so many barriers that they haven't been able to import as much as they need, and to the detriment of most of the population. But they eventually gonna go over there. So. You're going to see Japan losing ground, and those other big Asian countries took over. Yeah, no, I agree that the Chinese have all those plans that try to shift the economy to to more consumer oriented. They're all very nice on paper, but in practice, they build their economy on exports as much as the other Asian economy. So 50% of the GDP is investment. So to shift that to a consumer economy, it's not something you're going to do overnight. And that also applies for those type of industries that have been driving Chinese growth. There's more natural resource intensive sectors. So yes, I think eventually the Chinese are going to move towards a more clean and less resource intensive sectors, but I don't see that happening in the time span of the current plan that they have. And finally, the destined to be raw material. Yeah, I mean, you have to think of, because people like this, images that we're gonna go back to the colonial era and they're gonna be, just, planting raw material, sugar cane and this type of stuff. I don't think that that's the case. When you discuss this thing, is mainly think of first this discussion about how we're going to relate to Asia, and then there I think it's clearly this is going to be the core of the relationship, but that doesn't imply that the industry is going to disappear in the region. And Colombia is going to keep the industry it has. Brazil is going to keep having because there's a lot of advantages to the local industries in certain sectors. No? There's a huge distance, transport costs are a huge barrier, there's all the cultural issues. So the industry is not going to disappear. But if you think in terms of our insertion in the global market, and given that Asia is going to be an increasing part of that, I think, yes, we're going to be destined to be exporter of raw material, but the issue is what type of raw material, which kind of sophistication we're going to be exporting. And I think that goes down to the basic question, the challenge that we in the region have. I mean, whatever it is, if it's raw material manufacturing, if we don't develop our human capital, if we don't improve our level of education, even with manufacturing, I mean, we just have to look at the manufacturing we see in the region. I mean, in Mexico, in Central America, a lot of those assembly stuff is, you could be a computer, but you just, turning screws, and doesn't mean that so either raw material or natural resources intensive, etc. If you don't face this challenge, which you haven't faced yet, I mean, Brazil is growing now, doesn't have engineers to build, bridges, and so the quality is not just an amount. So whatever we're going to do, I mean, we need to improve fast and quickly the quality of the people we have. Otherwise, it doesn't matter if it's manufacturing or raw materials, we're going to remain at the bottom of the value chain. That's it.
Great. Let's take another round. We've got one in the front.
I was just wondering what you think the prospects are that Latin America will use this time as trade booms with Asia to improve transportation infrastructure and to reduce those transaction costs that you were talking about. Mm-hmm. And if this were to be an area for cooperation between Asia and Latin America, what are the potentials for cooperation and what are the constraints to cooperation?
Mm-hmm.
Right, let's just take a couple at a time. There we go.
Hi, I'm Kelly DeAngelis. I study international relations and environmental policy, and my question is a little bit off topic, but I believe Enrique touched on it, and that's environmental cost. And as China's starting to consider the huge environmental cost of their industrialization, I'm just wondering how you think that will affect Latin America, because I know that there are projections that China's going to shift their environmental costs to Latin America, and like you said, in the heavy natural resource extraction and things like that. And even if and when Latin America takes on more manufacturing and heavy industry, how will that affect the environmental aspect of Latin America?
Mm-hmm.
I just want to I'm gonna ask a question that relates to the title, because from your talk, it seems like Latin America and Asia has a mutual relationship, but in the future, is Latin America is looking forward to an economic development from the Asia and Latin America economic trade?
Okay.
That's it?
Yeah.
Okay. Well, thank you again for the questions. Infrastructure. I mean, this is one area, as Enrique said, that we have been working at the bank and try to draw attention to the issues, the challenges that we see there. Because if you think in terms of this, new world of Asia and this growing relationship of Asia, it only increased the strategic importance of infrastructure, of transport costs in general, for two basic reasons. I mean, if you think in terms of the competition we face in manufacturing, our big advantage is the fact that we are close to the biggest market in the world, and we can compete with them if we can deliver and ship these goods fast to the clients, particularly time-sensitive goods. If you look at what's going on with Mexico, Mexico has been losing market share to China since 2000. Particularly 2005, and now since the crisis, you're seeing an uptick in terms of of market share. So China is losing a little bit, but Mexico is gaining market share in the U.S. If you look at the composition of those goods, exactly those transport-intensive goods, goods that cost a lot to transport. Or time-sensitive goods that you need to be close to the suppliers. And if you look at automobile industry, that's big electronic items, or perishable goods. So if you're close, but you have a terrible infrastructure, a road doesn't work, you don't have competition in transport services. So then your manufacturing is really doomed. And the other thing is, if you are an exporter of raw material in general, no matter how sophisticated they are, those are goods that are very intense, very transport intensive. I mean, if you look at the share of the freight in the final, the price of the final good, it's huge. I mean, it's 30-40%. I mean, right before the crisis, this CVRD, this Brazilian iron ore company, was exporting iron ore to Shanghai, and the share of the freight at the final price of the ore in Shanghai was almost 90%. So it's almost a logistic company. They're just exporting transport services, not exactly iron ore. So for a region where its main exports are basically those type of goods, if you don't have ports that work, that are competitive, if your roads don't work, if your transport services are not competitive or doesn't have enough competition, you're gonna just waste away those rents. You just, something that could go into the producers or could be going to investment in education, science, technology, and so on and so forth, are going to be literally lost along the road. So, and of course, for Asia, in China in particular, they have an interest as well in reducing the freight costs and have more competition, because they have the Australians next door, which the transport costs are very low. But if you want to bring iron ore from Brazil, you're going to pay a lot of money in terms of freight, and so for them it's an issue also. They want to. So there's of course a potential there for cooperation. There's already stuff going on. The Chinese companies interest in infrastructure projects in the region. So it's just a matter of trying to have the right regulatory framework for this thing to work in a way that benefit everybody, both sides. But I think it's clearly a win-win situation. Environment, I have to admit, it's a big hole in our research program. We were trying to fill this hole now. And of course, there are big environmental implications with this thing, if this trend continues, increasing our specialization in this type of goods. And the Chinese, I think, has a tradition, particularly in Africa, of not being very concerned about those issues. But I think it's up to the region to impose, the right regulatory framework, the right incentives to avoid to spoil all those all this wealth that the region has. If the region doesn't do that, it's not going to be the foreign investors that are going to do that. So I think it's something that we have to keep an eye, and the governments are certainly trying to keep an eye on that. But there's a lot to be done, and there's a lot to be learned as well in terms of measuring the impact, emissions, the transport side of it as well, which is I think is the most important source of emissions when you talk about trade in this kind of things. And finally, the trade, you mentioned I'm not sure if I understood exactly the question.
Latin America seeking an economic development from the trade between Asia and Latin America?
Yeah, that's the idea. Now that's the whole point of trading goods and services. And
they really affect the lives of the Latin American people, because it's the Latin American people who will really impact by the economic growth of the Latin America. But would it be really perspective on the Latin American people?
They did. I mean, if I'm Brazilian, for instance, and I'm sure Brazil would be in a very worse situation, wouldn't have done so well after the crisis if it weren't for China, importing huge amount of soy, iron ore, etc. So the terms of trade improved. The balance of payment improved. Not only Brazil, I mean Chile, Peru, all those countries benefited immensely from Asia, particularly from China. So thanks God that the Chinese were there and they keep growing. Because if you were to depend only in Europe, in the US, you would be in trouble. I mean, we would be facing a deep recession right now. So it's clearly something beneficial, but as anything in trade, you have to be careful about what type of policy you have in place to make sure you maximize the benefits of the relationship for both sides.
Enrique, would you like to add on it?
Yes, very briefly, I think many of these questions are part of an important research agenda with the private sector, with the public sector, and in the academic sector. No, I mean differences in, for example, between China and Japan importing raw materials. I think there is also there the question, the comparison and differences between Japan and China regarding investments. No, I mean Japan has an important automobile sector in the United States, in Brazil, in Mexico, etc. And so what is the result? Well, they are not importing it directly to Japan, but they are doing they have new networks that, by the way, China is trying to develop very quickly. No? So you might have changes there. And regarding transportation, I mean, what is happening today, and which is worrisome somehow, if you want to, is that Asia, and very concretely China, firms such as from Hong Kong particularly, are buying in Mexico and in Peru, for example, all the ports, building the ports. No? So you could end up in Latin America with firms, Hutchinson Ports, no, from Hong Kong, which is a huge firm, and they are developing all over Latin America the infrastructure for shipping. No? This is reality today, Lázaro Cárdenas, Peru, and other places. No? And finally, I would simply say, of course, this relationship of Latin America, Asia, Asia-Pacific, of course, is also relevant for the United States. No? It's not only a bilateral, but I would say a triangular relationship. Because what is happening, of course, if Latin America is massively importing now from Asia, it is in many cases substituting from the United States and from other suppliers. No? So in the case of Mexico, for example, we are massively substituting from the US in terms of inputs in many value-added chains. No? So the issue of NAFTA, of jobs, of employment, of value-added chains in the United States will also be affected. No? Again, I would invite you there to a research agenda that is going on and where we know very little on these topics. No?
I think that about does it. I know there was one more question. We'll let the person ask afterwards. Thanks a lot for coming. We'll let you all go back to the United States of America and track the elections. Hopefully they're going the way you want them to. Please, before you run back to that, please help me in re-thanking our two guests for coming here today.